CA Harshit is conducting statutory audit of branch of a public sector bank. On examining 20 large advances of the branch, he finds that 5 examined cases, loan application have been filled up incompletely and with important details have been left out. So there is an incomplete filling of the loan applications and details are left out. In these cases, it is also noticed that cash credit limit to the borrower were enhanced during the year, but there were no proper record pertaining to assessments of enhanced working capital requirements in respective borrower files. So there is no assessment of enhanced working capital calculation. It is not there. Uh, so here, if you see cash credit means it's a loan taken from the bank against inventory. Okay, so that is the meaning of cash credit, or it can be against working capital. Sometimes there's a overlapping meaning for cash credit and overdraft. Okay, now the branch is unable to show such assessment workings in the system either. However, all 5 accounts are operating satisfactorily. Here, what is happening? There is an incomplete loan application, but the loan is given. There is enhancement of working capital limits or capital, credit capital, cash credit capital. So that's okay. There is a revision, but there is no calculation being done. There is no assessment. How did you arrive at the enhanced number? However, all the accounts are operating satisfactorily. These accounts have been classified as standard asset by branch. Would the above information prompt the auditor to change the asset classification on above account? What does the depicted solution reflect? So here, basically, is it a wrong asset classification? They have classified as a standard asset. For the purpose of provisioning, your classification of asset should be standard asset, then substandard asset, then doubtful asset and loss asset. Okay. So here in this case, the account becomes NPA when it ceases to generate income. Okay. So all accounts are operating satisfactorily. So there is no reason that we should classify the asset actually. So not required. So first of all, account is classified as NPA. The account is classified as NPA when ceases to generate income. Account is classified as NPA if it ceases to generate the income. That's the thing actually. So that is what your classification of the account will be. That's it. So account is classified as an NPA if it ceases to generate the income. That's the thing actually here. So here 5 accounts are operating satisfactorily. 5 accounts are operating satisfactorily. So there is no issue actually here. So there is no changes in classification is required. So no changes in classification to be done. You don't have to do any changes in the classification. That's the thing here. So here what has happened? One is two things are missing. One is there's an incomplete loan applications, incomplete no loan applications, and second thing is that there is a lack of assessment, lack of assessment of enhanced working capital requirement, enhanced working capital requirement. So that's the thing here. So there is a what you can say lack of what you say assessment of enhanced working capital requirement. That's the thing actually here. So there is a lacking which is happening here. So here this shows that internal control over advances are not operating properly. So I see on advances are not operating effectively. They are not operating effectively. That's the thing here. So there is a deficiency in credit appraisal. So there stands to be deficiency in credit appraisal. That's the thing here. And this deficiency in credit appraisal should be given in the long form audit report. Long form audit report. That's the thing actually. So here you don't have to classify. No classification of assets is required. It's a standard asset. receiving the interest installment regularly. Only control issue is there where application is not updated properly. Okay, and loan disbursements, it takes time. That's what they highlighted. Okay, fine.